Hello there, my name is Dylan and welcome to Group 4's presentation on Oporto and the evaluation and analysis of 4 potential markets for expansion. The agenda for this presentation will be an overview of Oporto, then the pest analysis of 4 ideal international markets for expansion, and then end with a justification of which one would be more suitable for them.
This is a company overview of Oporto. Oporto was founded in 1986 by Antonio Chiquicua, and Oporto is an Australian burger chain specializing in Portuguese chicken and burgers. Oporto's mission statement is it's all about creating a better customer experience and making delicious food even better. Oporto is overhauling its department of marketing. The company is working on its different marketing and branding campaigns. Some of Oporto's current marketing strategies are introduce a new store design to better cater for the demand of today's millennials consumer and updating targeting advertisement on mobile devices. Oporto is a major fast food company in the Australian market, going against other companies such as McDonald's, KFC, and Subway. Oporto is more known not as a sit-in restaurant. You usually order and go. They're usually found in places like a Westfield or a shopping centre. And even though they are a fast food chain, they are not commonly seen in a restaurant like a McDonald's, KFC, or Subway. They are more found in other locations such as shopping centers.
Japan.
The first market of opportunity we will cover is Japan. A quick overview of Japan is focusing on Oporto's entry into Japan. An entrepreneurial country, Oporto battles numerous problems to establish the business and eventually become highly successful. In doing so, Oporto should be more sophisticated when planning, coordinating with the control systems. Oporto would have competition in KFC, McDonald's, and Freshness Burgers, meaning they would need to take a different approach from these companies to seem fresh and attract new customers. For the pest analysis of Japan, first is political factors, the role of non-government organizations, civil societies, and protest groups. Japan has a vibrant civil society community, and Oporto should build bridges with them and seek out areas of cooperation. Second is government regulation and deregulations. The government is adhering to all the rules and regulations under the World Trade Organization norms, which Oporto also need to follow. For economical factors, GDP trends and rate of economic growth. The higher GDP growth rate signals growing demand in the economy. Oporto can leverage this trend by expanding its product range and targeting new customers. Second, inflation rate. The inflation rate can impact the demand of Oporto's products. Higher inflation may require Oporto to continuously increase prices in line with the inflation, which could lead to lower levels of brand loyalty and constant endeavors to manage costs. Next is social factors and Japanese attitude towards leisure. Oporto should conduct an ethnographic research to understand both attitude towards leisure activities and choice of leisure activities. Second, attitude towards authority. Oporto should carefully analyze the attitude towards authority before launching a marketing campaign for its products and services. Finally, technological factors, e-commerce and related infrastructure development. Oporto should evaluate the e-commerce technology infrastructure before entering the Japanese market. And secondly, integration of technology into society and business processes. Oporto should build a strategy that integrates societal values, infrastructure, and Oporto's business model. Next is Oporto's main target market in Japan. The demographic in Japan consistently is the 18 to 25 demographic. Targeting this age group has two major advantages. First is that this is the future of the country, and focusing on them could pay off in the future. Second is they control what is popular in Japan, and marketing to them could lead to higher sales. For demographic, fast food is not popular in rural Japan. Oporto should be focusing on opening up franchises in major Japanese cities. The first three cities that Oporto should locate to are Tokyo, Osaka, and Sapporo due to the dense population. For For behavioral, consumers in Japan are generally very brand loyal, however the older population is more so than the younger generation. Targeting the younger generation is a must as they are less brand loyal. This may seem wrong, but we need to attract customers from opening day, and with the older generation being brand loyal, attracting new younger customers who can become brand loyal is the smarter option. Finally, psychographic. In Japan, purchasing decisions are made depending on the nature of the product or service under consideration and the status of the member of that family. For Oporto to be successful, you would need an image where all statuses of families are welcome to use and purchase your product.
India.
Upon assessing other target markets, we saw a potential opportunity for Oporto to venture into India. Upon conducting a past analysis on India, certain issues have come to light. These issues will be addressed in the following slides. India and Australia have developed a strong political and economic relationship since 2009, with India being Australia's 8th largest partner and 5th largest export market. Despite Australia having strong ties with India, it's also important to assess the political landscape before finalising the decision to expand. India currently have seen an increase in protests and rallies recently due to government actions or inactions. For instance, health workers have been protesting to increase and regulise wages due to working overtime. Farmers have been protesting against the dilution of land ownership and laws which allow big corporations to easily take over. Therefore, Oporto could benefit from the strong political relationship Australia has with India, but India's current political affairs could also endanger Oporto's potential expansion. India's annual GDP was gradually rising, but due to COVID-19, it shrunk down to 23.9%, making it the biggest contraction of all the major economies. A low GDP technically signals a possibility of a recession, which could severely affect Oporto's plan in India. Fortunately, recent reports state that India's GDP is forecasted to rise again. To attract foreign investors, India had reduced its infamously high corporate tax rate from 34.61% in 2018 down to 25.17%. A low corporate tax rate for an international company means that Oporto will be able to maintain some levels of their profit, allowing them to continue to invest within its potential operations in India. Based off the half-seat insight, it is clear that Australia and India have vastly different cultural values. India's high in power distance, which states that India favours authority and structure. India's indulgence is measured very low, indicating it's a restraint culture and thus tends to not participate in much leisure activities. Oporto must develop a plan to ensure that these attitudes and behaviours does not compromise their marketing and operational strategy. India's economy is growing partly due to its IT sector, which made them the third most technologically advanced country internationally. India's growing IT sector constantly focus on promoting IT development, software upgrades, and investing in other tech advancements. Global company will outsource its IT department to India's highly skilled IT workforce. To ensure that Oporto does not fall behind in this market, its technology and software must be updated. India's huge economic growth, there's been a rising middle class which indicates a great disposable income. By targeting the middle class will allow Oporto to define their price points of their products accordingly. A huge majority of India's population practice Hindu and also other religions, which dictates that what meat can't be consumed and therefore makes chicken one of the most consumed meats. This will Oporto advantage as they won't require much effort to change their offering. The increase of disposable income means that the frequency of dining out have also increased. Combined with the quick lifestyle mean that the convenient food is the preferred cuisine.
Mexico. Firstly, a quick overview of Mexico. So Mexico is a growing economy and is projected to be a top 10 economy by 2030. 80% of their exports go currently to the United States. They have a growing trade relationship with Australia, but due to high political stability issues and potential cultural compatibility issues, this could cause severe problems for Oporto's entry to the market. Mexico's political situation. They are a part of the trading bloc known as the Pacific Alliance, which members include many Latin American nations. Low stability due to high government corruption. They use the legal system as civil law. This could occur operational costs for Oporto as they will have to translate Mexican civil law to common law. High nationalism. This could result in barriers for entry for Oporto as some consumers will be hostile to Oporto. They are currently experiencing a humanitarian crisis as there are many refugees and asylum seekers from Central America camping along the border to the US. Poor conditions for these people is leading to high crime and poor stability in the northern provinces of Mexico. And lastly, high violence, as the Mexican government and military is going beyond humanitarian guidelines to combat the rising drug and crime epidemic in the country. This is resulting in human rights violations, military abuse, media censorship, and violence. Mexico's economic situation. Firstly, they are the second largest economy in Latin America. They are classified as a less developed country. Their GDP was 1.2 trillion in 2019. Their population is speculated to rise above 127 million by the end of 2021, which a majority live in Mexico City, their capital. The average income of a Mexican is roughly $16,000 each year. Nearly 50% of all Mexicans consume fast food each week. Mexico's economic situation continued. They scored quite low on the quality of life index. This could pose risks for Oportos. Majority of their infrastructure is in the major cities versus undeveloped rural countryside, meaning Oportos will have to open their stores in urban city centres. Their debt is speculated to rise above $656 billion this year. Mexico contains high levels of resources, especially in agriculture. This is great for Oportos as they can source local produce for their fast food products, thus reducing costs and allowing Oportos to appeal to Mexican nationalists. Next is Mexico's social situation. The majority language spoken in the country is Spanish, meaning Oporto will need to hire staff fluent in Spanish to handle the initial expansion. High poverty, meaning Oporto will have to deal with potential HR problems with staff. High cultural differences with Australia, as shown in the model, meaning Oporto will need to invest resources into training their staff for dealing with these cultural differences, e.g. being a high context culture. And then there is Mexico's technology situation. Nearly all of Mexico's tech is sourced from the United States at the moment, as the government is currently working on creating a tech industry in the country. Therefore, Oporto will need to source tech for their stores from the US or Australia. This will result in higher entry costs for Oporto if they wish to expand into Mexico. Oporto's target market for Mexico would be 18 to 34-year-olds that live in the urban cities from the middle class. They would enjoy and eat fast food at least once a week and have a quick/active lifestyle that draws on the need for convenient, fast, and cheap food. United Kingdom.
Australia has a very positive investment relationship with the United Kingdoms. The countries have strong ties that are growing stronger. The relationship is built upon shared history, common values, and strong personal links. The relationship between the two countries spans decades and crosses all sectors of the economy. There are many successful corporations who have managed to expand to either country, ranging from manufacturing to agriculture. Wales, Scotland, Northern Ireland, and England make up the United Kingdom. London is one of the world's largest cities, with 10.3 million people calling it home. This makes the UK a very attractive target market for the international expansion of Oporto. English is the official language of the UK, with Irish and Scottish Gaelic also being widely spoken. This proves to be a great advantage for Oporto as it helps to avoid translation errors. Political factors such as the stable government in the UK as a result of their steady performance in rule of law, low corruption, and effective government policies. UK ranks very well for political stability. The exit of the British from the European Union has seen an atmosphere of uncertainty. However, it is believed that the withdrawal from the EU would result in the economic prosperity of the country, and it would create many employment opportunities, thus making it a great time for Oporto to invest in the market. Economic factors such as the diverse economy in the UK is the reason behind its success. The market is so diverse that it provides an equal opportunity for growth as long as there is a demand in the market. With the tax rate currently sitting at 19% for corporate companies, with promise of it lowering to 18%, makes the UK an attractive market for investors such as Oporto. Moving on to social factors, the UK falls among the world's top 20 high-income earners, thus meaning there is a surplus of money to be spent in the market. The Hofstede analysis shows that the UK and Australia share many common traits when it comes to the dimensions, with the biggest variance being in long-term orientations. The UK scores relatively higher in this dimension, meaning they value persistence, perseverance, saving, and being able to adapt. Oporto should keep this in mind when developing their marketing strategy. In terms of technological factors, the country has some of the world's leading research and development institutes. Looking at the target market in the UK, with 36% of people aged 18 to 34 eating takeout a few times a month, Oporto should construct its market strategies to satisfy the ideals and expectations of this age group. British consumers are expected to spend 22% more on takeaway deliveries by the beginning of 2021. Investing in urban areas would be of great benefit to Oporto. The behaviours of this target market show a high value for convenience and reasonable pricing. The British people love home-cooked style meals, making Oporto a great alternative to traditional styled fast food. With their order and pay service being more preferable for those who aren't comfortable with the song and dance of waiters and bills, I believe the UK would be a great choice for Oporto's expansion.
But which target market is ideal?
After many deliberation, it has been decided that India would be the best candidate for Oporto to expand internationally. Despite its current political affairs, our competitor have been able to operate without much trouble. Therefore, this shouldn't concern Oporto. However, Oporto should still pay close attention to the current political news, as such the situation is not predetermined. Although India's Hofstede cultural insight does not align with Australia, this does not necessarily equate to failure, as other international competitors have been able to successfully capture the Indian market. Furthermore, it should be noted that India's largest growing food type is fast food, with its industry growing at 40% every year, and combined with the rising middle class with their great disposable income mean that Oporto could potentially flourish. With a detailed marketing plan and a clear understanding of their target market, they can have a potential of being a key competitor in India.